the neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy, protect your views, know your neighbor.
Hello, and welcome to this week's episode of the Real Estate Investors Club podcast. I'm here with Mark Podolsky. Mark is the author. I'm going to start with this because I love the name of the book, Dirt Rich. He is the owner of Frontier Properties and his podcast, The Art of Passive Income. I've actually already been a guest on. So, Mark, welcome to the show, and thanks for being with me today.
Terry Shower, thank you so much for having me.
So Mark, just by way of introduction, can you tell our listeners a little bit about the journey you've had through life that's led you to be here with me today?
Yeah, if we rewind the tape to 2000, I was a miserable, micromanaged, 45-minute commute to work and back investment banker, specializing in mergers and acquisitions with private equity groups. And Terry, it got so bad for me, I wouldn't get the Sunday blues anticipating Monday coming around. I'd get the Friday blues anticipating the weekend going by really fast and having to be back at work on Monday. So my firm hires this guy. He's telling me that as a side hustle, he's buying up raw land, pennies on the dollar at tax deed auctions. He's flipping them online and making a 300% return on his investment. And Terry, I'm looking at companies all day long, and a great company, has 15% EBITDA margins or free cash flow. Average company's 10%. I'm looking at companies all day long, less than 10%. So of course, I don't believe him. So I've got $3,000 saved up for car repairs. I go to New Mexico with him. I do exactly what he tells me to do. I buy 10 half-acre parcels, an average price of $300 each. I sell them online. They all sell for an average price of $1,200 each. It worked, 300%. So I took all that money, I went to another auction, and this is where I live in Arizona. And again, it's 2000. There's no one in the room. I'm buying lots and acreage for nothing. I sell all that property, and I made over $90,000 cash. So I go to my wife, and she's pregnant. I said, honey, I'm going to quit my job and become a full-time land investor.
How'd that go?
And she said, absolutely not. So I said, okay. So it took me 18 months for the land investing income to exceed the investment banking income. And then I quit. I've done it over 6,000 times and counting as of today, and absolutely love it.
Wow. That's really cool. So it sounds kind of accidental, but providential at the same time.
Exactly. And I love the fact that you just used the word providential in a sentence.
Yeah, real grad school sentence.
Yeah.
And so tell me about the other stuff you do. I love the title Dirt Rich. I think that's great. Also the podcast, like how did those things happen from your investment activities?
So I love buying and selling raw land. Don't get me wrong. But it really only helped 5 people, my family. It's not that the customers didn't love the land they bought, but nobody ever called me crying saying, Mark, you changed my life with this land investment. But what Land Geek does and what my higher purpose is, and I think my higher calling is to help people solve not just their money problems, but their time problems. And I think the way to do that is to create enough passive income where it exceeds your fixed expenses and that you're working because you want to, not because you have to. So I teach people exactly how to replicate my model so that they can have that passive income, solve not just their money problems, but also their time problems. And then if we're going to get real grad schooly, move up Maslow's hierarchy of needs into self-actualization and really do what they were meant to do in life and have that time and energy and freedom to pursue it.
Mm-hmm. So I don't want to, since we're in the realm of grad school, I don't want to nitpick, but it sounds to me if you are kind of like flip selling a land, right? Like I'm a tenants buy and hold rental property girl myself. And so for me, it makes sense how that's, I mean, passive income, right? It's like, it's not passive for the manager, but it is in a sense bringing cash flow every month. And when I hear this, like, buying and selling of land, the first thing that comes to my mind is, well, actually sounds to me kind of like active income, but just very high transaction value income. So tell me about the business model.
Okay, so Terry, where do you live?
Montreal, Canada.
Montreal, Canada. Okay, I'm going to assume that you actually own 5 acres of raw land in Colorado in the States, and
Okay.
you owe $200 in USD back taxes. So you're essentially advertising two important things to me. Number one, you have no emotional attachment to the raw land. Canada, the property is in Colorado. But number two, you're financially distressed in some weird way because we don't pay our property taxes. We don't value it in the same way. As a result, the county treasurer keeps sending you notices saying, Terry, if you don't pay your property taxes, you're going to lose that property to a tax deed or a tax lien investor. So all I'm going to do is look at the comparable sales on your 5 acre parcel for the last 12 to 18 months. I'm going to take the lowest comparable sale. Let's say it's $10,000 and divide by 4. And that's going to get me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer of $2,500 for your parcel. Now, you accept it. Why? Because for you, $2,500 is better than nothing. Now, in reality, 3 to 5% of people will accept my quote unquote top dollar offer. But now that you've accepted it, I have to go through due diligence or in depth research. I have to confirm you still own the property. I have to make sure that back taxes are only $200. I have to make sure there's been no breaks in the chain of title, no liens or encumbrances. And I have this big property due diligence checklist. I outsource it to my team in Jamaica. It costs about $11. They're connected to an American title company. Now, if I was investing more than $5,000, I take no title risk and just close traditionally through an American title company. But this is only $2,500. So my team will prepare the plat maps, the aerial maps, the satellite maps, GIS maps, everything I'm going to want to know about the property as well. So we'll assume everything checks out. I send you a check for $2,500. Now I own the property. So Terry, I'm going to sell it 30 days or less. I'm going to make a cash flow just like your rental home. So Terry, I have a built-in best buyer. Do you know who it is?
No, who is it?
The neighbors. The neighbors. So I'm going to send out neighbor letters saying, hey, here's your opportunity. Protect your privacy, protect your views, know your neighbor. So oftentimes the neighbors will buy. Now, if they pass, I'll go to my buyers list. The buyers list passes. I'll go to a little website you may have heard of because you're in Canada. It's called Craigslist. It's the 15th most trafficked website in the United States. I'll go to one I'm fairly certain you've heard of. It's called Meta or Facebook buy sell groups and the marketplace. And then we'll go to the lands, landmoto.com, landsofamerica.com, landandfarm.com, landflip.com, landhub.com. These are platforms where people buy and sell raw land. But the secret or the magic is in my pricing. So all I'm going to ask for is a $2,500 down payment for you to control this 5 acre parcel that was owned by Terry Shower. So they'll put $2,500 down. So I'm going to get my money out on the down. I could go 6 to 10 months out, and then I'm making a car payment. Let's say $297 a month at 9% interest for the next 84 months. So it's a one-time sale. I get my capital out on the down payment, and now I'm getting $297 a month for the next 84 months at 9% interest, no renters, no rehabs, no renovations, no rodents, and because I'm not dealing with a tenant, I'm exempt from Dodd-Frank, RESPA, and the SAFE Act, all this onerous real estate legislation in the States. So it's a simple game, Terry. Can you create enough land notes where your passive income exceeds your fixed expenses, and then you're working because you want to, not because you have to?
Okay, I get the passive income uh, angle on it, and but I'm surprised that people would go for this. I mean, if you're picking up the land so cheap, why is somebody else willing to pay so much more for it?
Well, when is the last time you bought something at a Nordstrom?
Never.
Well, what's the last thing you bought?
I don't even know what that is.
No, okay, Nordstrom is a big department store in the States.
Okay. Okay, the Bay. It would be in Canada, it would be called the Bay.
Okay, so you go to the Bay.
Rarely, I know what it is, but, like, yeah, my mom shops there.
Okay, so you go to the Bay and buy a pair of shoes, right? And you know that there's a 300% markup on the shoes. Does it bother you?
No.
No one cares. People want what they want. So What's different though is if I made you an offer of 25, 30 cents on the dollar on everything in your garage that was costing you money every year that you weren't using,
Yeah.
how quickly would you take that offer?
Like, now, please come clean
Ex-
it out. Like,
so that's the
can your
mentality.
guys come this afternoon?
Right. So we're taking what was once an asset is turned into a liability and back into an asset for somebody else.
Okay. Huh. So it's no, it's a very interesting business model. I wonder hearing that um if that would work in Canada. I also wonder about sort of the utility of land because I feel like, let's say you do this in Arizona.
So I do this all throughout the United States, but mainly in the Southwest, Northwest, California, and Florida. These are the sunshine states, and there's
Mhm.
abundance of raw land in those states, and there's a lust for land in this country. So would this work in Canada? We've looked at buying Canadian land. There are some frictional costs involved in Canada, but there's billions of acres of raw land available in the United States, and anyone can own
Mhm.
US land. Now, if you're listening to this and you're in Guatemala and you think, oh, I'll buy US land, that's not going to help you get immigration status or a green card. You'd still be you'd still be, on the hook for US property taxes. When you sell the land, there's something called FERPTA. So you'd have to pay 10% of your gain to the US government, and then you'd also be responsible for your own in-country taxes as well.
Mhm. And just so another thing off the top of my head, do you do this with all your own money, or are banks willing to finance land?
So that's why this is such a great business model, is because it's inefficient. You can't go and get a land loan from a bank. So you can use your own money, but I prefer using other people's money. So what I teach is use three levers: other people's time, so inexpensive virtual assistants, software and automation, and then other people's money. And that's how you scale your land business to the next level. But when I started, I only started with $3,000. I have clients who start with $500. You don't need a lot of money to get started. But when you want to get to a really big numbers, you will eventually run out of money. And so you're going to want to use other people's money.
Mhm. Okay. Have you really been listening to the episode, or has your monkey mind been taking you off in one direction or another? Our mental habits can be our biggest assets or our biggest liabilities as we pursue certain goals. For me, the biggest performance gains have always come from training my mind. In my book, Mindful Landlord, I talk about how you can train your mind and how you can apply some of these strategies to your journey in the real estate field. The book is available on Amazon and also on its website, mindfullandlord.com. Now I'll stop evangelizing for the power of mental training and let you get back to the show. Let's talk about the book for a minute, because I know you mentioned off camera before that you're coming out with a updated version 2. So is the book basically explaining your business model and how people can get started at this, or is there something else as well?
Yeah. So Dirt Rich talks about my story and how I got into the land business, and walks everybody step by step through the model. And that's really a really nice overview of the book. Dirt Rich 2 is less fundamentals and more how to scale your land business and using those three levers that I just talked about.
Okay. And tell me, so as far as the way this business model, like, you sounds like you started in 2000. Did I have that right?
I did. I did. I
Okay.
started in 2001 full time.
Okay. So you now have 21 years of data. And I'm assuming you lived through 2008. You guys are also having a little bit of a slowdown now. We're in Canada in the midst of like a fairly big market correction right now, real estate wise. How has this model functioned across different economic cycles? Because, like, you have boom times, you have crunch times. What does that look like?
Yeah. So, this is another shameless plug for the book, Dirt Rich. I actually talk about what happened to me in the Great Recession. So I had what I call Parkinson's law of money. So the more money I made, the more money I spent. So I've got three kids and we had a nice house, but I could afford a bigger house. And my kids were in public school. Why not private school? And because my neighbors had nicer car than me, I had to get a luxury car. And I'm not even a car guy. So I started building all this personal overhead for
The
myself,
overhead. Yeah.
thinking
Yeah.
that this is
Yeah.
going to be what's going to make me happy, or what society says looks like success, because I was making a lot of money. But then the Great Recession hits. I really got hit hard in 2010. I lost 50% of my income because people were calling me. So, Mark, is between paying off my land or food. I'm going to choose food. And so, even though Frontier Properties was profitable, I had a problem personally. So, I talk a lot about that in the book. But what happened in 2010 was it took about 2 years for me to rebalance the portfolio, figure out the new pricing, and then taking the new cost basis, because the people that default, they lower my cost basis. I resell the property, I get a new down payment, I get new monthly payments. And so I still extend out my return on investment. Because I'd never been through a real estate cycle before, I really had to figure out how to rebalance. But I did. And then I've also learned a new process called Profit First, which allows me some fiscal discipline so that today, as we head into market correction, I have cash to put into assets and will lock in those better prices so that when we come out of the downturn, just like Southwest Airlines locks in their gas prices cheaply, we become super profitable.
Okay. So this kind of like segues into my next question. I think a lot of what gets talked about in the real estate industry, and on people's social media feeds is exactly what you were talking about is the overhead, right? It's the yachts, it's the cars, it's the things that like we project in order to appear successful, whether or not they actually bring us internal fulfillment. A lot of times they don't. What is not talked about very loudly is the lifestyle hit that a lot of us, most of us take on the way to getting where we want to be. And that lifestyle hit, for some people, like myself, involved living in a bad neighborhood for a long time with my tenants until I scaled my portfolio and could move out of like the Montreal version of the ghetto.
Sure.
For other people, it's late nights. It might be sacrificing your own doodads or whatever kind of things it is. Can you tell me a little bit about the lifestyle hit that you've taken on your path to being where you are today, or have you taken one?
Well, I definitely took one. And for sure, the lifestyle hit was severe for me in 2010. But if we rewind the tape even further, I was taking a lifestyle hit when I was working full time as an investment banker. I'd get up early in the morning and I would work on my land business. I'd stay up, I put the kids to bed, and I'd stay up late at night and work on my land business. And so I was singularly focused on getting out of that job. And even, I mean, they're not probably listening to this podcast. I would work on the job on my land business. So that was definitely, we know when my friends would be out on the weekends and they'd be going out for dinner, I would be working. When people were getting more sleep than me, I would be working. So I definitely paid the price there. And then 2010 came along and I went from a 4,500 square foot home to a 1,700 square foot home. I went from having luxury car to a used Prius. I went from having a nanny 5 days a week and a housekeeper to none of that. I still miss that, by the way. No, I'm kidding. But so these luxuries that I could afford that really weren't making me happy or my family any happier, going out to these big dinners several times a week and having babysitters, that all went away. And it was such a blessing now that I look back on it, because there's this illusion that this stuff, this lifestyle will make you happy or bring you joy. And really, for me, it was quite the opposite. I've realized that there's nothing out there that was going to bring me any joy or happiness. It's an internal game. And I realized that all the things I really want in life have nothing to do with money. I want a fit body, a calm mind, a house full of love. None of those things have anything to do with money. And so today, whether or not I take a lifestyle hit or not, it's irrelevant, because there's just that internal sense of having enough.
Absolutely. I think that's really so important. And I mean, I think when I was on your show, it was I was launching the book called The Mindful Landlord, and like for me, that's a really big priority. Is that I think there are these external markers of success that we use to signal how well we're doing to the outside world, and it's possible to get like super competitive and wrapped up with that. But that ultimately, it's the internal markers of success that are the things that make us walk around with a spring in our step, right? Which is, like you said, a calm mind, feeling healthy, love, having the time to pursue the things that are like, higher up on Maslow's pyramid of value, right? Like that's what ends up becomes a facilitation, like money and time become facilitating being able to do those things that ultimately have more internal value.
No, abs. I couldn't agree with you more. And I love that title, the Mindful Landlord. But to your point, it's it's an interesting thing as you get older when you see the difference between being rich and being wealthy. Because
Hmm.
if you're rich, you can easily signal to the world, I'm rich. Wealth is completely hidden. It's internal wealth, but real wealth is hidden too, in the fact that I'd rather invest in a asset that's cash flowing than get a depreciate asset to signal to someone, I've got money, and they don't even care. So,
Yeah.
but when you're younger, there's a great book, Terry, that I think you'd love, called the Second Mountain, and it's very important, I think, for younger people to go through that first egoic mountain and suffer a bit to realize that, oh wait, these things don't really move the needle in my life. So the first mountain is egoic. You get a good education, you get a good job, you have the family, you get the nice house, you get the car, you go on the nice vacations, you go up that mountain to what society tells you, and you realize, oh my gosh, this is empty and unfulfilling. But then you go to the second mountain, which is purpose, vocation, community, faith, and spirituality. And it's a harder mountain to climb, but it's way more fulfilling.
We're definitely going to drop that in the show notes. I haven't read it. I'm going to go check that out. um, so did the nanny come back? The housekeeper come back?
What? The full time? No, I get it once a week. No, not
Okay,
full time.
just checking.
Yeah,
I couldn't live without a housekeeper.
yeah, yeah.
um, Let me ask you another question. So, what do you think that we in the real estate industry should be talking about that we're not talking about?
That's such an interesting question. No one's ever asked me about that. Well, I don't think very deeply about the general real estate industry because I'm on the long tail of real estate. So I don't go to real estate investment conferences with flippers and wholesalers and landlords. I'm just an inch wide and a mile deep. I would imagine that what we're talking about is something that I can imagine in real estate circles is not talked about. And I can imagine that in real estate, they're talking about, I've got this many doors, and the signaling is going on in the real estate industry, or I got this much depreciation, or I just, you know, got this loan for this huge project, and it's all meant to impress. I think what's more interesting is what to you impresses you, what makes you truly happy, because what will your legacy be? And that would be, I would imagine, something that is a more meaningful conversation in real estate circles or money circles or the circles that people run into where people are a little bit more vulnerable, and it's definitely more interesting, I think, than, oh yeah, I just got that great new rental home that and just put a tenant in, and now I can, do this or that.
Yeah, I call it the doors, deals, and dollars trap, right? More doors, more deals, more dollars. And I guess I have kind of a funny relationship to that because I think on the one hand, people who are really pushing the limits in be it real estate investing, landlording, what you do, set a bar. So I think that there are really like, like professional athletes, let's say, there's like really a place for people who can show us how can I make my own game better, because that's what we're doing, right? Like we are, looking at how to live a fulfilling life, but at the same time, we're also trying to build businesses that run as well as possible, that are profitable, that can serve people, that can serve our needs. And that in itself, the internal functioning of those businesses and the fact that they serve the reason for which we created them, I mean, that's important too, right? So I'm agreeing with you. But I'm, also kind of saying that there's a balance of that, right? Like there is the, getting yourself aligned so that you can actually appreciate your own successes. But like in building your own success, if you're trying to learn a specific game, you're an athlete who's like practicing at something, you're going to want to watch the Olympics of that sport, or watch like some professional athletes do that. And that like one can find inspiration in it without being consumed by the competitiveness, right? So
Yeah, I completely agree. I think you should be like a duck. So if you look at a duck, they're real calm on the surface, but they're furiously paddling underneath. And so can you work on your craft? Can you become the best real estate investor in the world and yet remain and keep your calm and have your equanimity as adversity hits you? Because as you level up, it's like life's like a video game. It's not going to get any easier, and nor would it be any fun if it got any easier. But can you enjoy the game of it and realize it's just a game, not take it so seriously, not take it so personally when you get knocked down a level, and not think you're so great when you go up 2 levels.
yeah.
So to your point, yeah, you don't ever ignore the craft. You want to get better in every area of your life. And I think that's, that growth and that meaning is so important and part of that super spiritual journey. But to be mindful is a skill where it's two different skill sets, and you want to really converge them. One is being mindful, one is being happy and content and fulfilled. And the other one is creating wealth, which is a whole other skill set. But oftentimes we think, well, once I have that wealth, I'll be happy. It's not true. And so, to your point, I think really the ultimate goal is to have both, to help and serve and create an incredible legacy for yourself, help others, but at the same time enjoy every moment of it while you're
Mhm.
doing it.
Wow. I love that. I couldn't have said it any better myself. You know what your next book should be? Mindful Dirt.
Well, I've already had the third book working. It's gonna be Life Rich, which will be,
Okay.
so we got Dirt Rich 2, Life Rich.
Okay. Not
And
Mindful Dirt.
yeah, I'll definitely be talking about mindfulness, and so often you see people, they set these amazing goals for themselves, and then they hit them, and then they move the goalposts, and so it's never enough. And I think there's nothing more tragic than seeing somebody that has all their material needs met in life, and they're still not happy, and they're still not fulfilled because it is an internal game.
Yeah. Yeah. No, for sure. I mean, I feel like we could keep on discussing this for a long time, because there's also this, actually had a happiness researcher on the show like a long while back. And she was talking about a thing called, I think it's hedonic satiation, which is like that moving of the goalpost is actually natural, right? Like you will within a couple of weeks acclimate to the bigger house, acclimate to the bigger car, and it's not going to give you the same bang of pleasure that it gave you the day that you bought it. And so like it's a question of, taking the time to celebrate, but also realizing that like the next shiny object is just going to be the next unshiny object at the back of the garage, and that's like the normal way in which we function. So if you're taking a lifestyle hit or some kind of taking on extra debt or extra stress to get that thing, you better be sure that it's going to give you some kind of lasting happiness, and not just be a thing that you're going to play with for 2 weeks and then you're going to acclimate to it.
Yeah, absolutely. I mean, the Buddhists call it impermanence, and it's true. Everything's impermanent. So you get it, and then it's that feeling's gone. It's just ephemeral.
Yeah. So Mark, thank you so much for this discussion. We're coming to the end of our time. I feel like we could go on a lot longer, but we can't.
We could go on a
Um,
meditation retreat, Terry.
oh
And
yeah,
it, and yeah, we could just sit
organize
there
it.
and breathe and then talk deals.
Okay. Put a pin in that one.
Okay.
Why don't you tell our audience what's the best way to connect with you if they want to learn more about what you do, want to learn a bit more about your business model?
I think the best way is thelandgeek.com. And if they're interested in learning more about the business model, I think the best way to learn anything is by doing it. So I have a free course that will teach you how to double your money 30 days or less. It's thelandgeek.com/quick deals. Thelandgeek.com/quick deals. And then from there, if they want to go deeper into the model, if it resonates with them, we have options for those people as well.
Thank you so much, Mark, for sharing that. I know I'm kind of tempted to go over there and check that out. Thank you for spending this time with me today.
Thank you, Terry. I appreciate it.